Well, hello and welcome to the Property Trio. Today, we're going to deep dive into investing in Perth. So it is a juicy one, and it's great to be chatting to my co-hosts, Dave and Mike. How are you both?
Very well, thanks, Kate.
Doing well.
Yeah, we're not talking about weekends. Anything noteworthy to share with our listeners?
No,
we got some. Well, I call it hate mail, but we got some constructive criticism that nobody really cares about us. They just want the gold.
Yeah,
right?
straight into the gold.
I don't think that's true for everybody, but we do like to take the feedback on board, so we're not going to prattle on too much.
No, well, what I think is relevant though, we're shaping up to have a pretty good spring market. Certainly in Melbourne, it's busy. We've got one of our biggest weekends of auction activity ever this weekend, and it's just been a really busy period. And of course, when you're straddling a long weekend, and Melburnians like to take that Monday off and enjoy the Melbourne Cup 4-day weekend, it means that the agents push all of the auctions to either side of that. So it is a heady time here. How does it feel up north for you, Mike? Things busy?
I guess we've probably seen a little bit of a lull in the investor work that we're doing, which is interesting, and it's very hard for us to pin it down to what that is because of the time frame between when people settle on a property and when they get in touch with us. So we're still certainly busy, but we've actually got time to work on some other projects, which is kind of nice.
Yeah.
It doesn't look great on the profit and loss, but it looks great on the innovation sort of projects that we're ticking off. But
Can we peer behind the curtain? Any hints?
No, nothing yet.
Okay, some good data though that we can unpack.
Yeah, always.
Great, I love it.
What is that average lag time again, Mike?
I haven't crunched it for quite some time. I mean, it peaked at just under 4 years, which was crazy, right? But blown out by people that waited 16 years on an off-the-plan apartment.
Yeah,
that was a story that I shared about missed deductions. But we get, if you look at the distribution, it's really kind of unusual because we get so much at the tax time for that next financial year. Or the end of that financial year.
Yeah.
But normally it's around about a year, 1 to 2 years at the moment, I think was where the data would probably land.
Yeah. So that must make it hard to predict workflows for the business other than around the end of financial year when people are motivated to optimise their tax deductions. Yeah. Because it's just pretty random, really, 1 to 2 years after people buy a property, depending on what the market, but it's pretty variable.
Yeah, and I think given the interest rates and some cost of living pressures, which is kind of like a tale of two stories, there's some people that don't seem to be moderating their spending at all. But that seems to have prompted people to cut into that time a little bit. People are wanting that cash back. So that kind of perverts things. But I always look, if we have a soft month, it tends to just mean that there's demand somewhere either side. I used to panic about it when we first started the business, over a decade ago. But I've been around the block a few times now. I know that we get better each day, so there's no reason to think everything's falling off a cliff.
Yeah, of course. Yeah. Look, Dave and I would have businesses like that. Sometimes it's crazy, and then it's feast and famine. It's the way it goes. And you innovate.
100%.
Yeah.
For us, you can have a few settlements push out 1 month that fall into the next month. Some come forward that next month, and you can have, which is happening at the moment, to be honest. We had a really big August, a flatter September, and now it's looking like being a huge October.
Interesting. The joy of small business. Okay, well, let's get into Perth. Mike, you've recently released some industry first data outlining the growth of Perth as an investment hotspot. So we thought to share that data on the show and investigate the drivers of the market to help investors thinking of buying in Perth in the next little while. So before we let you take over the show with your long-winded analysis, just to give a little bit of an overview, where I think things are for this show. A brief synopsis of the Perth market includes it's leading the nation from an all-dwelling standpoint year on year. As the end of last month, it was sitting at 8.8% growth year on year, with the next best being Sydney at 7.3%. So, quite a margin there. Houses are doing the heavy lifting again, topping the nation at 9.1% year on year. Units are still strong, but only in third place after Adelaide and Brisbane. So on those numbers, it's currently having a pretty solid run, would you say?
Yeah, it's winning. Right?
Yeah.
It's winning
the race currently.
Yeah. So Dave, what stands out to you about the Greater Perth property market, and what are some factors that might be causing this run?
Well, thankfully I have an auntie and uncle who reside in Perth and have for a long time, so they've been able to give me some good little insights. So population growth in WA is principally driven by international migration, which of course stopped during COVID, as did interstate migration to a larger degree than all other states, with the extended closed border and the old hermit kingdom there for a little while. So that's certainly playing catch up for WA at the moment. There's a significant housing shortage also at the moment. So very tellingly, there's about 27,000 incomplete new houses, which is 2.5 times more than normal. So normally a house takes about 6 to 9 months to build, and currently it's taking around 2 years.
Oh,
so that's
ouch.
Yeah, so that's really a hangover of the stimulation for building and renovations that the government provided, and that's what happens out the other side of these government interventions. Also, because the Perth median house price is the lowest of all capital cities except for Darwin, it's harder. Apartments are not as good value for developers to build. So new apartment blocks are difficult to finance unless they are high-end or in good locations, which provides a limit to apartment supply in Perth. And this is why Perth has the lowest percentage of apartments of all capital cities, which is actually around 16%, which I've shared previously. Look, but overall land in Perth has generally stayed affordable because of land supply being able to match demand mostly. So house prices don't necessarily follow the east coast. There's obviously a lot of land in WA and around Perth. So finally, house prices peaked in 2012 at the height of the boom Mark 1. And back then, you'd note Perth and Darwin were the second and third highest valued cities. Now they're the bottom two. So while the WA economy boomed in 2022, house prices rose, but haven't gone off the charts like the previous boom, but rents spiked significantly. So the big question, which I think Mike's going to help us answer today, is how far has this run got to go?
I just can't help but think the first run in 2012, when it went bananas, it was the talk of the town. Everyone was talking about Perth. We all wanted a piece of Perth. And I think interstate investors are a little bit more considered about all of that now. They saw what happened after that run. And so while economic conditions are really strong in Perth, that's just my hunch anyway.
Yeah, I agree. The old once bitten, twice shy.
Yeah.
Phenomenon.
Mike, before you share your numbers on the percentage of people buying in WA, I understand you've done some digging into the history of the state and you've got some interesting data for us.
Yeah, I found some skeletons in the closet. when you think about Australia, it seems crazy to think that we wouldn't be one country. But then if you look at, say, South America, I don't know how many there are. There's 20
Europe.
or something like that. So, Europe, of course. This notion of one Australia has not been a historical one. In fact, during the talks about federation, there were reservations from Queensland and WA, and they even had a New Zealand delegate that was potentially going to be part of Australia.
We tried to bring them on board.
Yeah, exactly. But WA had reservations about its geographical remoteness and of course the distribution of the resource wealth that it had, I think, is a big factor, and that's a factor that plays out today. And it is so far away. The closest city is Adelaide, which is over 2,000 kilometres, and Singapore's closer than Sydney to someone in Perth. So I found that very, very interesting, and they actually had a vote to leave the federation as well, to leave Australia. So there's some interesting history to Perth, or West Australia, as they almost nearly became called.
Wow.
They still do threaten to leave the rest of us if they don't get what they want, if they're not well looked after.
So tell us more about this Mike, dating back to joining Federation in 1901?
Yeah, so obviously they came on board, but despite joining in 1901, there was a referendum in 1933 where 66% of them voted to leave, right? So they were out to actually leave the Commonwealth. But there were legal complications. So essentially they went to the UK Parliament, and the Parliament had recently come up with an act basically to say that Australia was its separate entity. So they kind of didn't know exactly what to do, but they came to the decision that they needed, West Australia needed the approval of the other states of Australia. And we kind of said, no, you guys aren't going anywhere. You're sticking with us for whatever reason. I think it was probably a smart decision for the rest of the country because that's where all of our mineral wealth tends to live. But yeah, even as recent as 2017, there have been talks about succession. And there is actually a West Australian flag, which is kind of like a Union Jack with a swan in the middle, which would have been the country flag. So they've even gone to the point of doing that. I don't know if there's any national anthem, but perhaps we can come up with one today.
Imagine getting your visa ready for that. My goodness. Well, thanks for sharing that history lesson that we didn't ask for. But back to, in all seriousness, why is this relevant? Why was it worth sharing?
I think it is very relevant because it is so far away that it does feel like a different country, really different part of Australia. The mineral wealth in WA means that there's a disproportionate amount of income being generated compared to Commonwealth funds given to WA, and the mineral wealth in and of itself is really one of the main drivers of the property. So I'm trying to full circle it here, bring it all back to property. And the reliance on the export price of things like iron ore and international relations we have with our biggest customers like China, that all feeds into the property market.
Yeah, very much so. Dave, where does WA sit in the pecking order of states in Australia?
Well, it probably depends on your view. I think if you live in WA, you'd say number one. Maybe not if you're in Sydney or Melbourne. So, look, we know from their state budget, WA is expected to generate 2/3 of its revenue from direct state sources in 21-22, such as payroll tax, mining royalties, and fees and charges being a big one in particular. So, around 1/3 of state revenue will be provided by the Commonwealth only. So this is by far the lowest proportion of funding from the Commonwealth of any state. So this is one of the reasons, Western Australians and the local government can feel like they're providing more than their fair share to the rest of the country. So it actually gets only 34% of its revenue from the Commonwealth, whereas New South Wales gets 41%. Victoria 45%, and Tasmania, for example, is almost the opposite at 62%. So, that's where some of the beefs come from for the Western Australians. And, as some people say, Western Australians are well-balanced people. They have a chip on both shoulders.
Reminds me of that quote about how do you tell if a stage is level, the drummer's drooling out both sides. Big shout out to our West Australian listeners. Look, I think with WA accounting for half of the country's goods exports, you can kind of see with those figures that Dave just shared why there's a bit of reluctance to it. The exports contribute over half of WA's state gross product as well. So that feeds into the property conversation. That is an important statistic for property investors that are looking over west or to West Australia.
Yeah, there's no doubt that whenever people think about WA, they're thinking about mining, particularly iron ore. And there's, of course, more to mining in WA than just iron ore, with liquefied natural gas or LNG, crude oil, gold, mineral sands, and much more. It's certainly a resource-rich state. And in terms of WA revenue, though, Dave, how critical is mining?
Well, looking at the budget papers of 21-22, it puts it in this order: royalty income 27%, so numero uno. Taxation at 26%, Commonwealth grants 20%, GST 14%, sales and goods Sales of goods and services 8%, with the remainder being public corporations and other sources. So, in short, mining is very important, the most important aspect of their revenue, really.
Yeah, crucial, and it will be highly impacted by things like iron ore prices. So, Mike, getting to your data, what have you discovered about WA?
You've made me wait 15 whole minutes to share my data. That's
building the
main
suspense, Mike.
centerpiece of the show. So this is data that we crunched because we anecdotally thought, gee, WA seems to be having a real renaissance. So it was sort of a seat of the pants kind of feel, and we thought it was worth crunching, and our data ended up being in all the West Australian papers recently. So what we did is we looked at Q1 2022 compared to Q1 2023, and we found that WA had moved from the fourth most popular state for investors. So we're looking at where investors are buying around the country. It was in fourth position and actually shot up to second position in 12 months. So in real terms, that was a 22.49%. You know, I love my decimal places.
Yeah.
22.49% change in favour of WA, with every state declining except ACT over that period.
Wow. So what percentage of investors were buying into WA in Q1 2022 compared to Q1 23?
Yeah, so it was 9.38%, essentially 12 months ago, and it jumped to a whopping 22.49%. So it's actually come in just under Queensland, or second only to Queensland at 37.97%. So Queensland's still the most popular state for a number of different reasons. But to go from 9.38 to 22.49, that was massive.
That's a really big jump, Mike.
Yeah, it's massive. My Victorian land tax bill is big, but this is enormous. I'm having a chuckle because, Mark, your script, I love it. You've put in more breadcrumbs of F-bombs here. We're not falling prey.
Yeah. But no, your land tax bill would definitely be big.
Did you have your finger ready for the button to beep us out?
No, I didn't. Is it still there? Oh,
yeah,
there we go.
You trust us to be good.
It's huge.
Yeah, I do. Yeah, look, the data, of course, comes from our business, and even though we know what we're doing, or you'd hope so, and I know with WA, or let's say Greater Perth, and I talk about WA and Perth interchangeably because 75% of West Australians live in Perth. I knew WA was popular, but it was still a lot more than I really expected, and it just goes to show that Perth is winning the race from a property investor point of view, and it's a pretty close second as the most popular state for investors. So pretty amazing turnaround.
It's really charging ahead, isn't it? Charging down the straight, just a short nose behind Brisbane and Queensland. So there's no doubt Perth is having a great run and investors are flocking to the market by the looks of this data of yours, Mike. But Kate, what do we know about Perth's historical performance, and how might that provide a bit of extra perspective for our listeners?
Yeah, I'm going to take some of our friend Simon's data, Simon Presley. We love soaking up some of his insights. He released an excellent research paper about Perth and found that from the 14-year period starting 2007 to the end of 2020, the Perth property market essentially stayed flat. So at the start of 2007, Perth had the highest median house value of Australia's 8 capitals. And at the end of the next 168 months, it went absolutely nowhere, while house values actually doubled in Sydney.
Yeah, look,
incredible.
It is incredible, isn't it? And that's sort of like the $1 million question, isn't it? Is that going to be in Perth's future again, or has it got such a strong, sustainable economy moving forward that we're not going to see such a lull for such a long period of time? It's really hard to know, isn't it?
Yeah.
What are your thoughts? Do you have any thoughts?
I think renewable energy and different energy sources could throw a few interesting tangents out there. None of us can predict what will happen. We've looked at raw minerals and materials in the past, but past behaviour doesn't necessarily equal future behaviour when you're dealing with a different energy sector altogether.
Yeah.
A futurist might be able to answer this, but you talk about some of those renewable technologies. They all require widgets to build them as well, and especially batteries. And with lithium, as far as I understand, we've got quite a lot of lithium resources. You know, we talk about Australia being the lucky country, and that is because of the resource wealth, but it is all sort of tipped over to the west side, which is why we didn't let them go, right?
Yeah, 100%. And dug out of the land. And we know they've got a lot of spare land out there to find those sorts of resources. So I think, as I've said a number of times, I think the land to asset ratio of Australia is pretty helpful to driving our economy. Mike, what was the population during that time? Did we see a contraction or something to explain this result?
You'd think so, wouldn't it? Wouldn't you? Like, how could it be flat for 168 months without something going wrong? Well,
it wasn't. I wouldn't have called it flat, to be honest. Like it did fall. It was pretty awful, you know.
Yeah, and I suppose
it fell and then recovered to be flat.
Yeah. Well, I mean, it was still down a little
until
bit
recently.
But you compare it to inflation. I guess in real terms, it actually dropped. But Perth had a 34% increase in population over that 14 years, compared to 29% in Melbourne and 22% in Sydney. So, one thing that I learned from Simon very early on in reading his blogs and those sorts of things is that population is not it's not in and of itself an indicator of growth. So you can't look at a population projection or a trend line and say, well, property prices are going up. There's just too many nuances in and around that. But 34% increase over that time. So there's nothing from a population point of view that said why the property market shouldn't be performing.
Population growth is often a sign of available property because you need properties to have population growth. We know on the micro level, a lack of population growth can be really good for land value growth. And that's, looking at suburb level versus city level. And that's why you need to actually be able to drill down into the micro versus the macro when it comes particularly to population growth. Which we've covered before for our listeners.
We hear the lies, the damn lies in the statistics, and I assume that people can point to periods where other cities have had protracted periods of poor performance too. So what makes Perth any different?
I think, you can pick your time frames, right? And to get a bit of a sense of balance, obviously Simon's picked one that tells sort of the negative story there, I suppose. But, it's such a big time frame that it feels like, well, it's not him just trying to push an agenda. You can't do that over that amount of time frame and not have it be based on anything. We can pick periods in Sydney where the price did nothing for a decade, quite famously, until I think it was the 2013 increase or thereabouts. It was
it was after their Olympics. It just kind of flatlined. They went bananas for the 2 years leading into that. We did an ep on that.
Yeah, right. And that's likely to happen in the future as well. But to give you an example, over 35 years to mid 2022, Perth saw about 7.3% per annum across that big long time frame, which is quite comparable. But the elephant in the room when we're talking about Perth is just that exposure to mining, and to me it cements an inherent volatility or risk in and around the export price of things like iron ore and the relationships that we have with our main customers, our main buyers like China. And we know that there's some headwinds for China and their economic development, and things like that just make me a little bit nervous with Perth. I think people that are advocates of Perth will say, well, it's not just about mining anymore. We've got a diverse economy, but it still does have that huge exposure, and you can see correlations with the price of iron ore and the population and things like that. So it is definitely a lever of the market in WA.
Yeah, for sure. Dave, what's the outlook for mining and consumption of resources of iron ore right now?
Look, JP Morgan have recently revised their iron ore forecasts on the upside, but they're still saying a 10% drop in prices over the next 2 years, really due to the downturn in the Chinese economy. But one thing we know with iron ore prices and and trying to read the Chinese economy is, you can't look too far into the future. They do often, the forecasting does tend to get it wrong. So look, it's really hard. It's really hard to look into the future with any real certainty, to be honest.
Yeah. So with the market being so hot in Perth right now, is there a risk that, investors will be, in Mike's words, left naked when the tide goes out?
You just left me naked.
So they were swimming naked.
Yeah, I would have said underwater, but...
No, I just wanted that scary visual there. Look, Dave, I don't know what your thoughts are, but I think if you're wanting to time the market, Perth is one of those places where if you can time it, you can have some sensational results. If it's about time in the market, it's a little bit worrying with the performance that it's had. And Kate shared a great article that had a moving graph of median house prices in the capitals over time, and Perth really did kind of stagnate. So the worry for me is not the investors that perhaps purchased 18 months ago, but there are investors that are on the ground now that are going to these properties where real estate agents are saying, we actually think this is crazy. We're getting so many offers. Our open homes are just absolutely packed. It seems to me that it's inevitable that there will be people buying what is potentially over a real market value. And those are the people that I worry about the most.
Yeah, 100%. I mean, my 20-something cousin, Zoe, over in WA in Perth, purchased a villa for around $300,000 in October 2020 as they came out of lockdown, and that property cost $450,000 to the previous owners in 2012. So they hadn't had any price growth in 10 years. And so why do I highlight this? It's because it shows the risk of a potential larger and longer peaks and troughs than other capital cities because of exactly what you were talking about before, Mike, the over-reliance on mining, basically. And we know if there's a larger reliance on one area of an economy, there tends to be greater fluctuations and reactions to changes in that part of the economy. And we've seen that in Perth and WA. So as Kate's touched on just a bit earlier, with the transition to clean green energy, we still cannot be certain how this will impact the WA economy over the mid to long term. So there are risks, although you think with their land size and their capabilities, they'll still be a strong state overall in terms of their economy. But, if you're a risk taker and you do want to time the market, we know getting in and getting out, there can be money to be made. The only trouble is timing entry and exit is very difficult to do.
Yeah, so well said.
Where do you land on it, Kate? I mean, I'm interested in your thoughts on it. Obviously, we know that it can have periods where it outperforms everywhere. Yeah. But I know you're more of a long-term investor, as I think really everybody.
Yeah, I absolutely think that. I mean, I've got a little pearl of wisdom from a gold nugget in relation to that. But I think by the time everyone's talking about it, sometimes it is too late. That's one thing to bear in mind. Diversification is key. If someone said to me, I've got a broad portfolio and I'm looking for, to continue the balance within my portfolio, and I'm interested in something that is slightly less negatively geared, I would think that something robust in a great suburb in Perth wouldn't be a bad idea, provided it fits the plan as a long-term buy and hold, and its cash flows are achievable, and it's not being eyeballed as a potential quick flip or something to make money quickly, a silver bullet overnight. That's where it sits. I'm not negative about Perth at all. It's one of the most beautiful cities you could think of, and there's a fair bit of diversity to this city itself. But would I put all of my eggs in that basket? No. And would I hang my hat on getting immediate short-term growth? Not at all.
Yeah, I think Perth is one of those places where I would be thinking, if you've got a portfolio already and no exposure to the West, then of course there's going to be opportunities there. And I'm already trying to sort of preempt what sort of criticism a show like this might get, because there are so many investors that are purchasing in Perth, and I've seen quite a lot of talk on the forums, and anyone's negative about Perth, they sort of get cut down pretty hard. There's definitely opportunities, and while 75% of West Australians live in Perth, like Perth has some nuances as well. But
yes,
I remember
that's a really good point. I mean, like any other capital city, it has nuances, and even though its median's quite low, the inner western suburbs in Perth are the highly sought after, tightly held. You know, they've had stronger capital growth at the sort of the higher end over a period. So there are markets within markets.
Yeah, and they likely won't fluctuate. And I remember seeing Cottesloe in WA being the most expensive place in Australia. You know, there is quite a lot of money over west, and those premium locations will always do well. But getting back to the point about it being beautiful, I went and did a triathlon many years ago in Mandurah, and it was absolutely stunning. It was just such a beautiful place. But not that long after, it was on a current affair that people were buying into Mandurah for a certain point, and the prices had dropped so much that they were in a lot of trouble. I try not to watch Current Affair. It's a terrible show.
But look, we've got to keep perspective as well. There was a lot of off the plan stuff taking place over there.
Exactly.
That's in a different set of dwelling types altogether, and we've always been very wary about off the plan.
And I think that's the thing with the excessive land supply. That's why it's been flat for so long, because they can actually generally build houses. And I think that was one of the great points I actually got from my uncle, with the fact that, their builds are taking 2 years, and they've got, 27,000 houses that are currently unfinished, which is 2.5 times more than normal. So, when they catch up, I'm sure that's going to have a lag effect on an oversupply of property as well. So, there's lots of little sort of nuances to try to understand and ascertain. And that's why, probably like you'd said, Caden, and you were, I think, also agreeing with Mike, with that diversification piece as part of a portfolio. I think it certainly can make sense, but you've probably got to be a bit careful if you're putting too many of your eggs in the one basket.
Yeah, agreed. Well, on that note, let's go to our gold nuggets.
Now it's time for us to go mining for our gold nugget property tip of the day.
Look, I think from a gold nuggets point of view, it's just important to be heavily researched on the location as best you can. Looking at those short-term metrics and everything that's exciting about Perth isn't going to help you when in 20 or 30 years you're trying to sell the property or live on the property from a retirement point of view. I think you can get really, really excited by all those fundamentals, the build-up, the green shoots. Obviously Perth is winning right now, but you also have to consider what it's going to do over the long term, and also just make sure that with that heat already in the market, as Kate says, often when you hear about it, it's already too late. So this wasn't designed to be an anti-Perth investing property podcast, but just a bit of a cautionary look at some of the historical performance, just to make sure that you're going in there with eyes wide open. And I firmly believe that there are opportunities there, but there's also some risks on that side as well.
My nugget is the most important economy to be across is your own economy. And it's great to be watching the market and seeing what's happening in the short term. But ultimately, you need to make decisions around what's right for you. And so, how does this next property purchase impact future property decisions? Have you purchased your long-term home? Do you plan to purchase a future home? If you do, where do you live? How much risk is there by purchasing a property outside of that market versus one inside of that market? What is your price point? How does that marry up to the median price point, or what's affordable for the location you're looking to buy in? How might your personal cash flow change into the future? What's your time frame and timeline to hold? Most of the things you should be looking at is understanding what's right for you, and then looking external from yourself to pick the right property in the right location.
Right. Now, I'm sharing a little gold nugget here, even though I'm host. I'm always a believer in long term when it comes to property. It's a long game. You don't get rich quick, you get rich slow. But something that I want to overlay for this episode in particular is the tyranny of distance. And as a multi-property investor myself, I know how painful it is when an interstate property needs significant work. Even having a handy husband, it means that I'm a single mum for weeks on end while he packs the trailer and goes on a long drive. And, you know, Tasmania is a case in point, getting on the boat, going down there, doing 3 sets of 2-week renos. It's a big strain altogether, financially, time frame on the family. And you're adding a lot more distance between yourself if you're an Eastern Seaboards player, and you're looking at a Perth renovation. And properties might look great at the start, but 20 years in, they need renovating. So it's something to bear in mind.
Great insight.
Only because I'm feeling it.
Based on a true story.
Yeah, true story. Great
Awesome.
episode. Really good to see you guys.
Well done, Mike.
Thank you.
See you, everyone.
See ya.
Cheers.